Okay, I think we are live. Are we live? We are indeed. Okay, right. Sorry for the slight delay, folks. We had just a couple of technical issues this morning to kick us off, but as they say, better late than never. Yeah, better late than never. So welcome all to the Trade Zone. My name, for those that don't know, is Andrew Lockwood. I was on last week. I am on today. I'll be on next week and the week after, basically courtesy of Eightcap. So thank you very much indeed, again, Eightcap, for inviting me as your guest host for this month. We'll be doing it every month for the course of the year, as we did last year, with other guest speakers as well. So some really exciting times and great way to kick off your trading week as well, to see what others are thinking in the business. Now, these sessions really work the best if you interact. So if you want to get involved, drop me some questions, anything you want me to look at. I'll be only too pleased to have a go, see if we can make sense of what is going on. So maybe we'll kick it off by, if you're listening in, let me know maybe your name. Don't have to use your real name. Let me know your name and where you're from. And also, we'd like to know the level of experience that you've got as well, whether you've been in the markets for a couple of months, 6 months, whether you're a fully established trader, maybe 2 years plus, something like that. Let me know, because obviously we'd like to know the type of audience that we're pitching to, so that we don't maybe make it too technical or maybe make it too basic. So that's a really good way of us to gauge who we are listening into. So I could say welcome all for today. Bit of a slow start to the morning. For those of you that are following the fundamentals of trading, we had really busy week last week. As you know, we had 3 central bank rate decisions. We had rate hikes across the board in the Eurozone, in the UK, and of course in the Fed as well, all raising interest rates as expected, pretty much. What I took away from those was that the most hawkish, if you like, hawkish basically means sort of aggressive upward pressure on interest rates, as opposed to dovish, which is the sort of negative push on interest rates. I think the most hawkish of the central bankers was the ECB. Lagarde, who's the president of the ECB, she raised interest rates by 0.5%, but she also pretty much set in stone that we're going to see another 0.5% next month, which was a little bit, I don't know if anyone was listening into it, but I found it quite sort of interesting hearing some of the questions that are coming in. One of the questions was from a guy, I don't know where he was from, and basically said, you've always said in the past you're going to be data dependent and you're not going to react, you're not going to preempt anything. And what she's done is basically preempted. She is moving interest rates next time. I think she caught her off the guard a little bit. I've never seen a central banker basically say we are definitely going to be moving interest rates next month. Obviously, it's called forward guidance. She wants to try and basically stem the spending and sort of give the markets a clue that rates are not for pausing anytime soon, like the other central banks. And since then, the central bankers have been on the wires, basically saying we've got more central bank rate hikes to come. So the euro has been outperforming. Pound came in pretty much in line. Again, a 50 basis point rise from the Bank of England. Afterwards, the Governor Bailey was basically saying that it's very uncertain times. Inflation's still a concern, but it's heading in the right direction. The markets considered the Bank of England to be less hawkish, maybe than the other two, or certainly than the Eurozone. But nonetheless, the bond yields collapsed and bond yields took it to be less hawkish in the UK. Look at the charts in a minute to see how we can capitalize on that. And then, of course, you had the Fed. They moved their interest rates. Well, they were the first ones to move in interest rates by 0.25 basis point. Looks as though the markets are rightly positioning in for one more rate hike, another 25 basis points before we maybe see a pause. Initially, the US dollar came back on the back of it. But what you saw on Friday was quite important. Friday, we had non-farm payroll. It's basically the job numbers in the US. And it came in really strong. Came in at 517,000. We were running a competition in our trading room to give away I don't know, some of you may have seen it. We were giving away an assessment account in our prop firm, which is we do in partnership with Eightcap. we were giving away a $12,500 challenge prop assessment in the Eightcap prop firm. And all you had to do was guess the exact number for the non-farm payroll. And I think the highest we got, well, I think I was one of the highest. I came in at I predicted 287,000. I think someone came in at 300,000 or 302. It came in at 517,000, massively missing expectations to the upside, showing us that there's a really, really tight labor market still in the US. So just boiling that down to make it very simple for those of you that don't really understand economics too much. If more people have jobs, and 517,000 more people do have jobs outside of the agricultural sector, if more people have jobs, well, what are they doing? Well, they've got more money. They've got money in their pockets. Yeah, they're getting income. And with that, they spend more money. And it also means that employers, because there's so many people joining the workforce, it means employers have to pay up to get staff to join them. This is all inflationary. Okay, inflation is what the Fed are trying to fight with their interest rates. So anyone that was expecting a Fed pause or pivot lower in interest rates this year are going to be slightly disappointed. And since then, the US dollar has been on a huge incline. Okay, so this is basically the DXY. This is the dollar index. Okay, so what this index does, it basically pitches it against 6 other major currencies on the globe, and it tells you exactly where the dollar is. So you know the dollar has been trading, well, pretty much all of last year. The dollar was trading stronger as interest rates were going up, and then they sort of basically peaked at sort of the September area. With this nice bearish pattern up here. These are bearish patterns that we teach. This is back to back, bearish engulfing, bearish engulfing, bearish engulfing, lower highs. We were calling that in our trading room. The dollar is peaking at these levels. Interest rates started to, they're still going up, but they started to ease back. Inflation, more importantly, started to ease back. I think I showed you that last week if you were watching. And because inflation is pulling back, the dollar's been pulling back. But now with yesterday's or Friday's number, we're seeing a bit of a spike back in. Inflation hasn't gone away. Right, let's have a look here. We've got Steve Anston from Queensland, Australia. Welcome, Steve. What time you got out there at the moment? You got 9:15 in the evening. Welcome to you. Thanks for tuning in. How long have you been trading, Steve? We've got Sharon Sky Sikta from Bangladesh. Shawan from Bangladesh. How long have you guys been trading? Welcome, Mr. Sigdar, to the Eightcap trade zone. Okay, so look, we've got really some exciting stuff as well going on here on the Eightcap platform. A lot of you that use the fundamental news, we all look at, a lot of people will look at Forex Factory, but Eightcap now have introduced their own economic calendar, which I've only just got access on Friday, late Friday. It was given to me earlier, but I had such a busy week with all the data that's coming out. Only had some downtime to review it. I looked at it this morning. Really, really intuitive and a cool piece of news events, a news source that you can use. We'll look at it in a second. Dave Lovell, good morning to you. It's morning. Where are you from, Dave? Where are you calling in from or listening in from? Beaming all over the world. So this is the Eightcap economic calendar. Now I've had to cut off half the screen because it's got all my other sort of thumbnails up there. I'm not logging in and all that, but yours is going to look something like this, and it really is quite it's quite in depth in terms of what news it gives you. Now you can get this by going to your Eightcap portal, your portal where you've had your Eightcap trading accounts. If you haven't got one already, then of course you can do so. Just go to eightcap.com and register for the site. Even if you don't have an account, you don't need an account for this. You can have demo accounts or dummy accounts. You can have that, no problems at all. So get over to there. Start off get into your portal. You get login details and all that. They send you all that. I did mine many moons ago, so I don't know exactly how the process goes these days. Essex, Dave, well, just down the road from me. We've got Perky's in Netherlands, 2 to 4 years on and off. Good to have you in the room, Perky. Good to see you in there. So here's the economic calendar. I think our colleagues here have just given you the link here to the calendar. So basically it tells us what's going on. This is Monday. It takes a bit of I'm still learning as I go. You can see here the Monday, Tuesday, if you look at my little mouse here, Wednesday, Thursday, Friday, Saturday, and of course Sunday. So we've just had the retail sales out in Eurozone, EMU, European Monetary Union. So this is they were going for 2.5. You'll get in a few minutes time. In fact, it may be there now. You'll get in a few minutes time the actual read that comes out. But again, if you scroll down, what I like about this as opposed to the others is it actually gives you, the details of that release. So if you click on it, okay, you actually get to see exactly what the read was and how it affects you and so forth. You'll see where is it? I saw it earlier. It comes up with a graph showing all the different reads in the past. Okay, so you can play with this, explore with it in your own time. If you scroll to the left as well or to the right, you can see upcoming events as well. Normally, this is the case after non-farm payroll and after the central banks. Normally, the week after is pretty light on fundamentals, and this week is very light on fundamentals. You've got the time zone. Now, this is in my time zone because I've logged in under in my clock. So this is in the UK time zone. Tells you what time. So Lagarde is speaking later. It tells you that it's high impact news as well. You can now Lagarde, she's going to be talking. I don't know what more she can say today. I don't know why it's high impact news. It should be high impact, but I don't think it's going to be high impact on this occasion because she's pretty much said all she can on Thursday on Thursday when she raised interest rates. But you can keep on scrolling Thursday. Not a lot out today, but keeps going through. The currency here. This is JP, Japanese currency. You've got the US there as well. So out on nothing out. Well, Tuesday we've got in Australia, which you may know all about, Steve Anderson. You've got the rate decision out of Australia. Now, it looks like that the Australian Central Bank, stands for the Reserve Bank of Australia, are going to move interest rates up another 25 basis points. You may see me doing these hand signals, by the way. This is what we used to do when we were in the trading pits. That's 25, oddly enough, and that's 35, and that's 45 and 55. All hand signals from the city many, many years ago. So it looks as though they're going to raise interest rates by 25 basis points well, it's at 3:30 in the morning, my time. That will be, and this is basically, I mean, they've left with no option. If anyone looks at the economic data, we had a really, really high inflation read last time out, 7.8%. I think inflation came out in Australia. It really shocked the market, and that's when the Australian dollar just flew up higher. So this RBA, although they don't really, they're not keen on moving interest rates, and they know that when you move interest rates in Australia, and Dave will tell you this, when you move interest rates in Australia, they have direct impact almost immediately on the population. A lot of the debt in Australia is in mortgages, and most mortgages in Australia, correct me if I'm wrong, David, are on variable rate mortgages. So they move interest rates, mortgages go up, and it affects almost immediately, the spending power of households. So that's why they're almost reluctant to move it too much, because obviously that's going to affect. We don't want to see everyone going into poverty and what have you. But nonetheless, they have to curb inflation, 7.8%, and they've got to get that inflation down to 2 to 3%. So we'll keep an eye on that. It's going to be important. That's good. His name is Steve. Yep. Okay, good. So yeah, so that's going to be an important one. I personally think they're going to be Governor Lowell's is going to come on afterwards. I think he's more likely to be, obviously it's hawkish, moving interest rates up, but I think it's likely to be a cautious hawkishness. I don't think the Australian dollar is going to go as much maybe as some might think on a rate hike, because I think they're going to be sort of a bit more cautious. So keep scrolling through. I've got nothing really much else going on. I mean, we've got German industrial production, DEs, Germany. You've got some Swiss data in there as well, which is worth looking at. So go through this in your own time. I suggest you do this on a Monday morning. Obviously, we'll be streaming it live around this time. But of course, if you're in Australia, you might want to do it early. Go to the portal. You can do it in your own time. And I'm not sure, of course, if the other guest speakers are going to be doing it on a Monday as well. But now you can, of course, do it yourself. So that is basically for Tuesday. Wednesday, I'll tell you what's important on Wednesday, really, and hopefully it's going to be here. Yeah, okay, they have got it here. That's good. I'm pleased to see that because I'm just exploring this portal as well. Williams is speaking. Fed Williams. Remember, they've just moved interest rates. They've had a really strong employment read. The Fed presidents, they like to get out there on the wires and talk about their forward guidance, where they see interest rates going. Fed Williams is going to be speaking. Got to pay attention to that. It's basically going to be mapping out where they're going to go in the future. So keep an eye on that one. What else we got? We got this chap speaking as well. Fed Walker speaking. Lots of Fed speakers out this week. On Thursday, we got GDP out in the UK. Have we got that in here? Hopefully we've got it. Let's have a look. Just testing to see if they've got all this stuff. We should have UK GDP. It is there, I'm sure. Thursday, isn't it? Is it on Thursday? It should be. Let's have a look. Bear with me a moment. Maybe it's not on Thursday. All right, we'll have to check that. I thought we had GDP out this week. Maybe it is on Wednesday, was it? Or was it on Friday? Oh, okay, my bad. Yep. Eightcap is right. Eightcap's economic calendar is right. I am wrong. GDP is the only main event really in the Eurozone for this week. So gross domestic product, basically the health of the economy. We'll be looking at that as well. Are we going to be dipping into recession? Remember, 3 negative quarters is recession. Okay, last was down 0.3. So a negative read will basically be an official recession. Also on Friday we have Canada unemployment. Okay, so keep an eye on that as well. So all this data, great to have a look. There it is. CAD unemployment at the end. So again, not only does it tell you the release, but it gives you more information if you scroll down as well. It tells you what the recent event was and how it's going to affect the different currencies. So check that out. Okay, let's have a quick look then what's going on in the markets. This is basically my momentum meter. It's really important. I think, I don't know how I'm going to trade the markets without looking at something like this. It basically is, Steve, you're just a beginner. Well, you're in the right place. You're in the right place. Do shout out if you have any questions at all. We'll hopefully get them all answered. You also and Mr. Shaun also loves Eightcap as a broker. Yes, absolutely. It's my preferred broker as well. It's also the partnership with the City Traders. That's the company I own and run, City Traders, where we educate and we fund traders as well, courtesy of Eightcap. So what's here? What's showing us here at the moment is basically the strength of one currency against the weakness of another currency. Different colors, different currencies. You'll see this green line. I've colored. You can change these colors to suit whatever you want. This is on the Trading View platform. I also have it on MT4 as well. I had it coded many years ago, 2006, before I was on this sort of public platform. I don't know how any traders say without it. It's basically showing me the strength of one over the weakness of another. So look at this greenback. I colored mine green, as I say, because it's greenback. Whatever. Green is strong. Dollar is strong. This is the daily chart. I can work this down to the 4-hour chart if I wish. It's going to be showing strength again. It's great for scalping. It's great for intraday trading. It tells me where the money is flowing on a daily basis. So at the moment, the money is flowing into the dollar. But what's interesting for me, and I want you to just maybe take this on board for this week, and then you can come back to me next week and tell me if I was right or wrong. Ordinarily, when the US dollar goes stronger, the euro should go weaker. Why is that? Well, because a currency transaction has two currencies going on. That's why they call them pairs. A pair. So when you buy one, consequently, you've got to sell the other. Yeah, that's what a currency pair is doing. You're exchanging one currency for another. Yeah, when you go on holiday, you go on vacation, you go to the Bureau de Change, you look for your currency where you're going, and you buy. If you're going to France, you buy euros. Yeah, and for that you give your US dollars in, or wherever you are in the world. Two transactions going on. So the dollar and the euro are the most actively traded currency pairs on the planet. It actually accounts for about 30% of all transactions is the euro dollar. So it stands to reason when the dollar goes stronger, the euro goes weaker. But what's happening at the moment is the dollar is going stronger. But look here on the charts, the euro is actually going stronger as well. And that shows me there's inherent strength in the euro. So the euro is a strong currency. So me as a currency trader looking for an edge, what am I going to do? Well, I'm going to buy what everyone else is buying. Yeah, I want to buy a strong currency, and I want to sell against that a weak currency. That's all I'm trying to do as an FX trader, or any trader for that matter. I'm trying to basically get an edge. That's all we're trying to do in trading. Finding that simple edge. My edge is buying strong, selling weak. Dollar is strong, euro is strong. What's on here that's weak? Well, you can see here on the chart, the white line, British pound is weak. The New Zealand dollar is weak. This is the Australian dollar. Despite the fact that, as I said to you earlier, despite the fact that we're going to have maybe a rate hike this week, the Australian dollar is trading weak. So buying these strong currencies against selling those weak currencies is the way you should positioning. And that's a longer term play. I mean, I'm talking about day trading, but you can also trade this type of analysis on the lower time frame charts as well. If you're looking at what's happening today, for example, if you're scalping on the 5-minute chart, bit rich for me now, you want to be buying what's being bought and you want to sell what's being sell what's being sold. So you can draw that down to any particular time frame that you like. So the US dollar is getting strong, euro is getting weak. So one of the currency pairs I'm quite like, and I'm going to come to this one in a moment, is the euro against the British pound. Okay, the euro against the pound. This is the daily chart here in the bottom right. I just expanded out here at the moment. This was a technical level of resistance on the way up. Okay, you can see it bounced off it there. This is the daily chart, remember. So what makes up a daily candle is much more many more market participants than the lower time frame charts. So here we've had this level of resistance broken through. It's now going to act as support. Remember, we've got a strong euro, we've got a weaker pound. So the bias for this currency pair now, we are in an established uptrend. Well, I don't want to buy the tops of any trend. I don't want to sell the bottoms of any trend. I want to use pullbacks to get into the trade. And you can pull back. You can use a whole number of different reasons why you pull back. Remember, you don't need to spend lots of money on trading strategies. If the markets are trending and you've got a trending strategy, you should make money. Okay. But obviously you need to have defined reasons of entry. I like to buy into a pullback. I like to buy 50% pullback. I like to buy a pullback into previous structure. This is the 1 hour chart. Okay. Very simple ABC, or 1, 2, 3, as I call it 1, 2, 3, 4. Here you've got, we've got, here we go. We got 1, 2, oops, lazy. Let me start that again. You've got swing high to 1. Let me just move all that away. There you go. Okay, so you got 1 where we started that swing high. 2, 3, 4. The pullback straight into the previous level of resistance. This is a pattern you'll see me trade quite a lot. 1, 2, 3, 4, pull back to previous high. That's a pullback. Now, when you see that type of pullback and you see that type of price action as well, bullish patterns, bullish pin bars at that level of previous resistance acting as support, when you've got a trend in a particular direction, that's as good as entry as anything. You've got your stops below the swing low. You've got your profit target at the recent high, and I think you can go higher than that. So that is basically what I'm looking at in the euro against the pound. Don't go and trade that blindly. Don't just go and place a buy trade now. This is not what this session's all about. I don't want you to put your hard-earned cash. You need to obviously devise your own strategy around maybe what others are saying. But this is not a signal, a Forex signal where you just go and buy, because we get trades wrong as much as we get them right. We just get more right than we do get wrong. If you're just trading one, expecting this to pay the bills, then you may be disappointed. Last week you were showing this, including legend with a different pairs on a different time frame. This made reading this a lot easier. Yeah. Okay. So euro against the pound. We're quite liking that one at the moment. As I say, the pound is a weaker currency. I don't want to get too technical with you, but just look here what's happening to yields. Okay. Actually, it's not on there, so maybe that's. I haven't got the yields up today, but that's fine. But bond yields in the UK are absolutely hemorrhaging at the moment, dropping like a rock, which is one of the reasons why the pound is under a little bit of pressure. And as you just said, likely to go into recession in a minute, in a few days' time. Now, the other currency pair I'm looking at this week with interest is going to be the dollar against the Japanese yen. Okay, this has got some number of reasons why this could easily bounce higher. One of the strategies that I teach here at the City Traders, and if you've been following me at all over the last 6 years since I've been on this education space, you would know that one of the strategies I teach is what I call the naked reversal strategy. It's basically looking for reversals, big reversals in the markets at key points of resistance and support, using price action, bullish engulfers and bullish pins and so forth. Friday, we put in a really good bullish candle on the daily chart at a level of resistance. Okay, this is not an exact, horizontal line. It's a zone. We came in there. This is the daily chart. I keep having to reiterate this. You've got about 6 to 7 days there. That Friday's candle completely engulfs pretty much all of them. That is a really, really bullish signal. And you would have expected, or you would have been not wrong in expecting, a pullback today once we got up to 131.50. Okay, it didn't. It shot up through. Well, it did actually. It shot up. Exactly, it did. This is a bullish pattern. See this today's candle. Okay, we shot up through. We did come back to retest, as I was saying, at 31.50, and now we're showing bullish momentum. This is a bullish pin bar. It's a bullish candle. You've got this on the back of yesterday's candle or Friday's candle, showing momentum strength. That's going to act as support. Now, this is also a fundamentally driven trade as well, because again, that those that follow the fundamentals will know that the Bank of Japan Governor Kurudo, he's set to leave, I think at the end of March or May or March or April, and his that's all pitching for his successor at the moment. And one of the nominations for his successor is the current deputy governor. Well, I don't think that is necessarily hawkish or dovish for the Japanese yen, interest rate policy. But what I think it says is if he does win the nomination, it's more like continuity. The continuity of the interest rate policy, the ultra low interest rate policy that the Bank of Japan has at the moment. Remember, low policy, ultra low policy is not good for the currency. Yeah, it was one of the reasons why the Japanese yen has been one of the weakest currencies over the last year or so. Obviously, it's showing strength now. It's gained about 10% since the it's gained even more than that actually. What's it gained since the highs when the Bank of Japan started intervening? It gained about 15%. Bank of Japan, the Japanese yen, but that is on the heels of where it's come from. It was down at one point, a whopping 31%. Okay, it's pulled back 15%. But the point being is the Japanese currency is inherently weak because of the policy. Interest rate policies are pretty capped. You know, they're capping at was capped at 0 now, was capped at 25 basis points, is now capped at 50. So if the new governor gets in and he's the current existing deputy governor, that's just going to be continuity, low policy. It's going to be negative connotations for the Japanese currency. Now that we've broken through this level of 31.50, which just again, I mean, just dragging that to the left here, you know, you can, I mean, again, this whole ascent, this whole move from the, you know, from these lower levels started around this level. Look back here, August 2022. Yeah. When the dollar got stronger against the Japanese yen, it all started around this level. And here we are again. We've just broken through that level. You would have been absolutely right in expecting this level to act as a level of resistance. It hasn't done. It's broken through resistance. It's now going to act as support. Targets for the upside will be 134.50 with that momentum. So you've got the bullish fundamentals coming out of the US. Really tight labor market. You've got bullish Fed speakers this week. You've got the dollar on the move higher. Rates aren't coming down anytime soon. If any of those market participants were expecting it, it ain't going to happen. Dollar's looking stronger. Yen potentially weaker as the new assessor. Structure resistance broken. Path of least resistance now remains to the downside. The only thing I think that can shock this would be if they were to announce a really hawkish new governor, which I don't think is necessarily going to happen. For this week, I think the dollar, is, well, I don't see any real reason why the dollar should basically trade much lower this week. I'm not saying it won't be a currency you can sell in weeks to come, but this week, most probably grinds higher. So that currency pair would potentially work. There it is. There's the DXY again, coming into the next level of resistance at 103.75 before we look at 105. Okay, folks, I've gone over my time again. I'm sorry to keep you. Hopefully you've got some info out of that. Do go and check out the Eightcap trade calendar. As I say, it's fantastic. It's something that hopefully will help you in your week planning as well ahead of the week. Get familiar with what's coming out. Even if you're not trading the fundamentals, I do think it's really important that you are aware of what is going on. Ultimately, this is what we're doing. We're trying to make money out of these moves. It's a good idea to know what's actually moving it, whether you try to predict the movements. I think that's very hard. I don't try and predict the movements of the fundamentals. I look at the technicals on the chart. But it's great when the fundamentals back it up. Okay, folks, I'll leave that there. I'll be back on Wednesday. So make sure you tune in for that as well. Wednesday, same time. We'll be discussing how the week is planning out. Hopefully, we'll see the dollar stronger and the yen weaker, and we'll see the euro stronger against the British pound, and we might see stocks coming under a little bit of pressure as well. Gold's coming back as well. Gold maybe is finding some support. We'll see. But we're there on Wednesday to talk all about that. Thanks for tuning in, guys. Thanks for being interactive, and thanks for letting me know where you are. Steve, you're a beginner. As I say, you're in the right place for that. Thanks, Perky. Thanks, Dave. Thanks, Steve, as well from Queensland, and Dave, of course. Until Wednesday, have a good couple of days.